My name is Mike Sullivan. I'm a former IRS agent and teaching instructor. Welcome to my YouTube station. I have worked thousands of cases. I started my IRS life in 1973, and that's all I've been doing work since 1973 in the tax vertical. I know what I'm doing. I was a former agent, so I was the IRS at one point in time. So whatever I say should be very valuable to you. I have a whole team of former IRS agents on staff. I've been on all the major networks. I've been on Fox, ABC, NBC, CBS, The Briefing Room, Newsmax, Newsnet, a whole bunch of them. Just go to my website at 777irs.com. You can learn more about me. I try to give you the things that you need. If you need representation, well, to be quite frankly, I don't know a better firm. Anyway, I want to tell you today about IRS refiling a federal tax lien past 10 years, and what does that mean? The normal IRS statute of limitations is 10 years. That is, from the time you actually file your tax return and it goes on the official record, which is probably, I don't know what, 6 weeks after you actually file. It comes to what's called a date of assessment, a TC 150 date, a 23C date. Anyway, all that jargon is useless to you other than to tell you you have 10 years from that date. Generally, the statute runs off. Things extend the statute of limitation. Offers and compromise extend it, time while they're in there. Bankruptcy extends it, time it's in, plus 9 months. Pertinent payments agreements, by the time you ask for them to get them, that extends it, but that's a little time. Collection due process, litigation, certain things extend it. So before you get all excited, you have to find out when your 10 years is over, and that's really easy enough to do. But if you look at the federal tax lien, there's a date for refiling. Why does IRS put that there? You want to know that. I was there when they made that transition at IRS, and this is a situation they would make that statement. Let's say you own a house, a homestead, and let's say at the end of the day, the 10 years was coming due and up, and you're in your ninth year, ninth month. But IRS knows if they refile that lien, you may sell the home in the next 2 years. Well, what they do is they refile the lien, they add more time onto the statute, and then at that point in time, they can go ahead and try to collect the money then. There has to be a reason for them to refile. They just don't refile to refile. There has to be a trigger or an event or something. IRS thinks that there's some way to recover the money. If there's 1,000 cases and there's a refiling date, maybe 1 out of every 1,000 will have a refile date. It's very rare, but IRS has to have a very, very specific reason. That doesn't mean you can still file an offer and compromise. You have other options to go ahead and settle the debt, but it gives IRS more right to collect the money. There goes Sammy, my dog. Every damn time I'm ready to end a video, Sammy has to walk by. I'm trying to have this pretty neat, clean environment, but not Sammy. Sammy wants to be seen. Anyway, if you have questions, let me know. I'm an expert in IRS collection matters. Thank you so much for your ear today. You're welcome to leave me comments. I try to get back to what I can, but give me a subscription. I appreciate you listening today. Thank you.